Hello, everyone. Welcome back to How to Trade. I'm Shane Vernier, and this is Trading the US CPI Fallout. Today, we're going to recap this morning's CPI release. We're going to take a look at the big movers and shakers on the market. We're going to answer any and all questions that you may have. We're also going to give you a quick brief update on what exactly is going on in the Middle East right now. We hear a lot of reports coming across the wires of pretty much everything from big-time news deals, big-time investiture being placed into the United States from Saudi Arabia, and then also there's weapons deals. There's there's news really coming out of Israel. A lot going on. There's an absolute lot going on. We sort of knew that this was going to be a big-time event, especially when we're going to have Trump give a speaking engagement anywhere. I think that there's a fantastic question in the live chat that I'm going to go over right now because it's a good one for Bobby Bob. So good to see you, Bobby. Welcome, Lita. Always a pleasure, Lita. Okay, guys, this is an interesting question from Bobby Bob, and it's a real good one because we are in sort of a new era. We're in a new era of finance. We're in a new era in the markets, and we have a president here in the United States who will go on the air and make comments any time of the day or night. That's just the way Trump is. I remember the first administration. I actually covered it for FXCM, one of the bigger Forex brokers in the world. And I remember being out there just trying to keep up with all the tweets and all the everything that's being said on a 24-hour basis. And it's really hard. So Bobby Bob's got a great question. He goes, "At Shane, how can we get a calendar or schedule of when Trump is expected to speak? This keeps catching me off guard, and it's frustrating. I keep having to close my trades early. It'll be great to plan around it." Well, Bobby, the thing about Trump is he's wildly unpredictable. That's part of the art of the deal. That's part of how he likes to do business. He loves to keep everything up in the air. That's just the way it is. And for us as traders, it's really hard to contend with exactly when you're going to get these statements. This right here is a great example from today. I think this is what you're referring to on your WTI trade. Trump's Middle East trip. President speaks at Saudi Investment Forum after Crown Prince meeting. This engagement was planned. So you're probably going to have to go to maybe ChatGPT and just run a quick search. You may have to run a few quick Google searches just to figure out when exactly Trump's going to speak because it really can roil the markets up. If you take a look at sort of what's happened today after your CPI report, you've got whipsaw action in the equities, and a lot of it has to do with these announcements. I mean, these are huge announcements. Trump secures $600 billion Saudi investment pledge on the Gulf tour. Trump says he will order cessation of sanctions against Syria. All of these things can move the market, specifically commodities. So there's really nothing that I can tell you about when to expect Trump to speak or when to expect that you're going to get some public commentary out of Trump. We just don't know. But what we do know is these big trips like this one, this was planned. I actually wrote something up and covered a little bit of it in the video that we put out for Switch Markets, the Switch Markets mailer. If you receive that one, then you know, our newsletter. If you receive that one, then you know what I'm talking about. But this was something that we probably could have predicted. We knew that Trump was going to make some announcements today. We knew the Middle East trip was going to be a big one, and that's exactly what we've seen. So all I can say, guys, all I can really say is you've got to stay on your toes. You've got to be watching your news cycle. You got to be running Google searches. I would probably run one every day to see when there's press conferences or really anything that have to do with Trump. It's a great question, Bobby, and it really has brought another dynamic to the trading. It's really made things much more difficult because we're seeing big moves that are coming out of nowhere, and they're coming out of nowhere because of the news cycle. That's all I can say about it. This is a prime example right here. This Tesla chart, we're going to go ahead and do a quick trade update, but the Tesla really has undergone a huge rally in about the last 3 days. And the reason why it has is because the US-China has, in fact, looks like that they've negotiated a deal. We had a big deal break over the weekend. Typically, you've got to be ready for that. News is always made over the weekend, seemingly when the markets are closed. So you really have to be there mentally ready to go on a Monday. That's one of the reasons I don't trade Mondays, because I don't know what's going to happen really early on in the trading week. T. Marina, good to see you, T. But this was one that we really were on to. I thought we did a real nice job with this idea, and it was just a real basic, just an absolutely real basic 920 EMA crossover. That's all it was. Now, I get a lot of questions. Shane, can I run this on the 5-minute chart or a 15-minute chart or a 30-minute? I say you can do whatever you want with it. The strategy itself, we laid it out. We did the coding. You guys can do whatever you want with it. But just remember this. These crossovers are typically designed to get you in on big market moves. And when you start talking about stocks and maybe buying stocks with cash and trying to get a fixed percentage return, you really should be looking at longer time frames. And the reason why is because you're not really trading a derivatives product. If you're just buying shares of Tesla, you really are just looking to get in on a big rally. And that's exactly what we got. I think we really nailed the top side target. I think this is one of those where we're talking about buying 285s and checking out at 3.25. And it just didn't take very long at all to get that. You can see there's your big open. And that is just purely a function of the U.S.-China trade deal. And then you've also got another real strong day today on the back of the announcement from the Saudis that there was going to be another $600 billion coming into the U.S. market. So the investitures there, foreign direct investment is a big part of what Trump's plans are for the United States, for the United States economy. It's called FDI. Japan's been a leader in FDI for a long time. So I think Trump's sort of taken a playbook out of the Japanese playbook and saying, hey, listen, we want as much investiture as we can get. And right now it really is starting to stack up, and we're not even 6 months into the administration. So I really am somebody that believed that the markets were going to absolutely crash, and we did get that early April crash. I think it's over. I really do think it's over, and I think this Tesla chart really does show you what's happening with U.S. equities. Guys, that's a big move. That's 285 all the way up to 325 in just a few days. I mean, let's just go ahead and take a look at it. $40 divided by 285 bid. I mean, you're looking at about 14%. That's big money. I mean, that's really a nice move. So I'm happy with that trade idea. I thought it was a pretty darn good one. Now, one of the things about trading those CFDs, if you're going to trade a CFD product that's based on an individual stock, then you are going to have a derivatives type of a situation. So you're going to be leveraged. You've got to make sure that you've always traded within your means. Don't dive into like a Tesla trade, betting everything you have on maybe a derivatives play, because when those markets come against you, that costs you money. Now, if you're making a play on the cash market, that's something a little bit different. Not nearly as much pressure as trading on margin. The problem is it just takes a lot more money to make your returns what they need to be. So I want everybody to, if you're interested in trading maybe those derivative CFDs based on individual stocks, check out Switch. Switch Markets has a nice lineup of some of the biggest stocks in the world that you could trade derivatives-wise. Just remember, when you trade those CFDs, you've got big leverage on the position. You need to make sure that you're really aggressively managing your risk. That's very, very important. If you have any questions about risk management, head on over to How to Trade. Send me a private message. All you do is click on my picture, send me a private message, and I will get back to you, and we'll see if we can get you on the right track. 1 to 3% is what I recommend. You know, if you're buying something like Tesla cash, though, you probably are going to put a lot more of it, a lot more than that in there. So that's an interesting trade. If you want to trade that stuff, head on over to Switch. Right here, this is one that we put out earlier today, and this was an Australian dollar, US dollar trade. I really like this. I think we've got a pretty good resistance zone that's coming into play right up around 65.49. So be sure to check out our key levels here, and it'll tell you exactly when to take the short and sort of what the next level is, what the next really port of call will be. I personally would love to sell 65.50s, and I think we're going to get a chance. Really like that zone up there. Nice monthly wave. Got a nice sort of rounded spike high there. You've got a nice big sell-off right there that developed in early April, and now we're sort of on the comeback trail. I really do like the ability there to sell that 65.49-ish. Let me see. We have a question. Euro Kiwi. Yeah, I'll look at the Euro Kiwi here in just a second. Actually, let's go ahead and take a look at the Euro Kiwi very quickly, and then we're going to look at the VIX, and I'm going to unpack US CPI for you, and then we're going to go on the hunt for some trades and see if we can execute a few live. But I really do like that Aussie trade. If I was looking at the majors this week, I would definitely have that one on my radar. No question about it. Okay, let's look at the Euro Kiwi now. I don't really care what I'm looking at. I don't care what the market is. My process is always the same. Consistency is an absolute huge part of what you have to do to be successful in these markets. Now, I've been kicking around the markets for a long time. It's been a long time in here. I look back on it, and you start to say, man, I've been in this for 15 years now. And that's a lot of charts. That's a lot of trades. That's a lot of really just a lot of analysis. But I really recommend that no matter how you decide to trade, I use Fibonacci's, I use my Bollinger Bands, and my moving averages. I do it the same way every time. I don't care what I'm looking at. So right here, if I'm going to look at the Euro Kiwi, which is something I don't typically look at, you can see what we have right here. Nice spike low, nice spike high. So there was sort of our support zone that was right around 188.78. Now we've broken beneath that. Let's take this down to a daily chart and see exactly where we're at with regards to current price action. Okay, now this is absolutely textbook of what I like to do. I mean, this is it. This is a daily chart. We've got our monthly support level right there. We've got sort of checked it out, and then we've bounced, and then we sort of checked it out, and we've bounced. Those are great trades. Those really are great trades. That's a very, very nice one, especially if you're coming right down to right around 188.78, and you put in a nice test there of maybe 189.11, something like that, and then you just get a really nice bounce back to the top side of a few hundred pips. That's great stuff. This right here is what I would call an exact or a firm hit right on my level. There it is. What's your low? Low is 188.84. I mean, we hit that almost absolutely perfectly within 3 pips. Then we turn around, we bounce up, and just have a fantastic trade to the top side. Now the game has changed. Things have changed right now, and the reason why they've changed is because our support level's history. It's gone. It's been taken out. I would be watching this relatively closely to look for that bearish extension. So if I'm interested in really getting in here in trading this market with a little bit of aggression, I guess, or at least to be, yeah, I mean, we're going to trade it. We're going to be aggressive. 4-hour chart is an absolute great time frame to be trading Forex on. I really like that because the Forex is a 24-hour market. And so to break that into 6 price bars that are 4 hours apiece gives us a real great idea of what's been going on yesterday and today. And now we have an opportunity potentially to pull the trigger on a nice trade coming into midweek. So I'm watching this closely. This is a fantastic market. Thanks for pointing this out. Unfortunately, I don't have a translation on your name, and I don't read Arabic. I believe that's Arabic. I just don't really know exactly what that is, but your Euro Kiwi trade, you would absolutely love a pullback sell from right around that support zone. What once was support's now resistance. So I would just be tracking this south. Definitely bearish though. I sort of have a bearish read here, and the way that we would just adjust the Fibonacci's is you just go down to the most recent swing low. But something like that, anytime you get those Fibbies to line up beautifully, you got a really strong trading opportunity there. So I'm watching that closely. I think that could be a pretty darn good one. All right, let's talk a little bit about CPI. Now, US CPI, I get critiqued sometimes, and I love the critiques. I love it when people show up and they say, Shane, I don't understand what you're saying. You're talking too fast. I don't get it. That's what we're here for. That's what How to Trade's all about. I'm trying to sort of impart my knowledge base onto you and help you become a more consistent trader. Just remember this, we're not economists, all right? We're not sitting around writing books or theses on, or what would be the plural of thesis? We're not writing papers on CPI, all right? What you need to know about CPI is this. It's an inflationary measure, okay? That's first and foremost. It's going to show you pricing stability, but it also drives a tremendous amount of participation to the market. So if, in fact, you're interested in where the market movers are, sort of what Bobby Bob was just saying, how do I do this when Trump's going to be talking? Well, you've got to be able to understand when these numbers drop, volatility spikes. That's it. That's really all you need to know about this. Now, this inflationary number, I'm sort of going to take it one step further. Pretty strong, guys. Pretty strong numbers. You can see right there, month over month for April, we came in at 0.2%. That was well beneath what was expected, but it did tick a little bit higher from the previous release. So in that regard, you could say, well, it did move a little bit higher. And I go, yeah, it did, but still beat expectations. And then right here, really, this is the one that everybody was looking at today. Year over year from April, 2.3%. That was beneath 2.4% expected and 2.4% previous. Now, when we talk about CPI, I always say it's all about relative. It's all about relative analysis. You always look at the CPI figures and you say, okay, what did the number do compared to what the previous release was and what our expectations were? And what we're looking for is outliers. We're looking for something that can pique our interest and tell us, okay, the situation's either getting significantly better or significantly worse. So when I'm looking at something like this, the Consumer Price Index in the United States increased to 320.80 in April from 319. It eased to 2.3%, the lowest since February of 2021. That's big. That's really, really big. So that shows that annualized CPI figure, even though it did rise, you still had a growth in your price, your inflation. It did it at a rate we haven't seen since 2021. That's a good thing. Now, does that mean that the inflation's over? No, I believe the inflation's entrenched. I don't believe high prices are going anywhere. And I look at how much things like real estate cost, vehicles. I mean, if you guys are in the market for like a new truck or a new car or something like that, if you're just going out to dinner, I mean, we went out to dinner a few times over the weekend. I'm blown away by how much money everything costs. Just very basic cuisine too. We're not eating anything super fancy. So what I'm saying is this is a real serious situation. I don't see any way that you're going to be able to bring that down without just really getting, something like energy to maybe cut energy prices in half or do something. I really think that this chart right here, going back to COVID, the COVID craziness of 2020, that chart right there represents pricing instability. The Fed has not been able to slow down CPI. That is a 45-degree angle going on 5 years. That's really hard for anybody to deal with. That is pricing instability. No question about it. Let me see, T. Marina. So no white papers anytime soon. No, I'm not gonna be writing any white papers. I was thinking about writing a book here. I might write one in the next year or so, maybe 2 years. I got to do something. Maybe just compile, sort of a lifetime or a career worth of trading into just a nice, easy to read book with a bunch of different subjects and stories and things. But we'll see how it goes. I'm not necessarily in any hurry to write something too intensive. That's for sure. Just writing will really exhaust you. We do a lot of it here, put out a trade idea every day that it's warranted. So this is a good look at the VIX. Now, this is definitely a topic that I hit on during that Switch Markets newsletter. If you're a client of Switch Markets, you should be getting the newsletter in your email inbox. If you're not, just be sure to check it out. We usually put a video out. We also put some written content out that really just gives you a quick rundown of what to be looking at and what to get ready for. I talked a lot about the VIX in yesterday's video. I made it yesterday, and the reason why that we talked about that is because the VIX is its stability. I mean, this is really the onslaught of the volatility in early April really shook everybody up. We thought the sky was falling. I personally said, yeah, these markets are going to absolutely crash, and the reason why is because there was a lot of panic and angst in the market over the tariffs. That's all it was. They thought that most of the traders said, okay, this is going to be a major correction. And as you saw that VIX go up to about 60, that's a very high level. That means there's a lot of fear in the market. Dave, good to see you. Dave, F19. My point is this, that angst is gone. I mean, the long-term area, really the long-term, I would say average from the VIX, the volatility index, the CBOE volatility index is right around 20 to 21. That's sort of your long-term average, and we can sort of eyeball it and just sort of show you exactly where that range would be. And you can see we just sort of oscillate up a little bit, and then we oscillate down, and it's been that way for years going right here. That was what do we have there? The 5th of August. So that was the Japanese carry trade when that thing exploded and we saw a big market crash. And if you want to go back further, what do you got right there? 26th of March of 2020, right there, 2020. That's the COVID craziness. And then we also had a couple levels in here that sort of correspond with the onset of the Russia-Ukraine war. Now, where are we at? We're starting to trade down to the bottom of that range with the VIX. So that tells us that the long side of this market is probably the attractive one. It's where a lot of folks are looking to go in. They're looking to buy. So we sort of showed you that Tesla, and you're talking about a $40 gain in what 6 days, 5 days? That's a staggering rally for a stock, but we're starting to see more and more of that stuff because there are bidders involved. Now, as we bid the markets and as everybody bids it, what happens to the VIX? The VIX goes down. So this is a very, very comfortable, very comfortable level for the VIX. Really suggests that you're going to see bullish price action probably for at least the immediate future. And I have to tell you this, you start hitting trade deals, one trade deal right after another, and then you're getting some foreign investiture, coming in at 600 billion or a trillion or whatever, then you're really going to start to see these markets. They're not going to have that downward trajectory anymore. They're going to start really going up. That's evidenced. I mean, there's just all over the place. Bitcoin at 104, risk assets. I mean, it is on. It really is back in style, and it only took about a month. The worst of this could be over. The worst of the tariff and the trade war stuff really could be over. Didn't last very long, did it? It's not over yet, but you start cutting tariffs from 145% to 30%. Okay, you're making a deal. And that's exactly what we're seeing almost on a daily basis. So I want everybody to understand what the VIX is. It's important. It's just the symbol VIX. And we don't really trade the VIX, but you look at the VIX to have an idea of what's happening in the markets as far as sentiment is concerned. So, yeah, as far as the other markets, if there's any other markets you guys want to look at, that's great. Just go ahead and throw them in the live chat, either in the trading room or on YouTube. It looks like we're having a live chat problem with our Forex Signals TV feed, but that's okay. We'll be sure to answer as many questions as we can. As far as what's happening right this minute in the markets, well, here's the US 30. Now, this is a very basic 30-minute chart. This is our 9 EMA with the RSI confirmation. So we're looking for RSI to get out of whack. We're looking for RSI to be up above 70 to sell it and down below 30 to buy it. Now, I love the 30-minute chart. I really do. I think when it comes to trading equities or really commodities, for me, it's US session 30-minute chart. It tells me everything I need to know. And there's a couple of things we need to be very concerned about here. Take a look at this. That's what you'd call almost a barcode. It's just whipsaw. I call it a picket fence, but you can see spike high there, spike low, spike high, spike low, spike high, spike low. That market has no direction, and that's for trend traders, that's a killing field. Now, this is one of those things where you say, okay, if I'm trading the 9 EMA, how have I done today? Well, that's pre-market. That right there is opening bell ding ding. If you're trading it without any confirmation, you're getting destroyed, essentially. You would have bought there, then you would have been reversal. You might have sold there. You might have bought there. It's just absolutely choppy. This is a nightmare scenario. It's a nightmare scenario for this type of strategy, but there's one saving grace, and there's one thing that can really keep you out of trouble, and that's our confirmation. That's our RSI. Now, the RSI is not overbought, and it's not oversold, and that tells us what? It tells us that we don't particularly want to trade this market, at least on this time frame. Now, just looking at this US 30, this 30-minute chart, I would say I don't want any part of this. Right now, we're off about 150 points. US 30 is off about a 174, about 0.5%. We just can't get anything going. We haven't had the rally. We haven't had the crash. That's really tough to trade, especially if you're an intraday trader. So what can we do? Well, we look over at our tote board and try to find something better to trade. How about the US 100? US 100 is on fire. Okay. So what will we be doing now? Now this would be tough because we broke right there. Opening bell, ding, ding. Broke above the 9 EMA and just sort of trended higher from here. But you really didn't have an opportunity to buy into it, at least not according to your RSI. Now the RSI settings that we're just using the factory settings. RSI, the period's at about 14. And it's based on the close of the price bar. That's it. Very simple. Not really anything to write home about right there. RSI link is 14. The source is the close. I wouldn't even worry about the smoothing or any of it. Just like that. So that's what you have. So right now we're in overbought territory theoretically here for the US 100. Do we want to buy it or sell it? Well, I mean, we could look to sell it. You're probably not going to get that to develop, at least probably not by the end of today. I would be surprised if you do get a big sell-off. But if, in fact, you get a bar close beneath the 9 EMA, then you're going to go ahead and send them short. Personally, I have no problem going down to a lower time frame. None. Now, the reason why is, number one, okay, we're on a big rally day up. So, yes, you are fighting an intraday trend. There's no two ways about that. But you're going to get a legitimate setup here that's going to give you a chance to trade it. So something like this, you're deep into overbought territory there. You're just waiting for the sell. You don't really get it. Right there, you would have got your first sell, okay? And you could have taken that trade because you're in overbought. Your RSI is up above 70. That would have been your trade right there. Now, a couple of things that you're really working against you taking this trade. That would have been sort of your sell there. And then right up here would have been your swing high. You probably could have put your stop loss right there above the previous swing high. I probably would have had it right up there, something like that. You got a very serious problem, though, with this trade. Now, the RSI says to take it, and the 9 EMA's got the setup there for you so you can take it. The problem is what? You had a news day, and you had Trump out there giving speeches, and you had a lot of economic developments and events that really could spark just a pure trend day up. And that's exactly what you got. So you already lost once. Personally, I don't think it would be a bad trade to maybe take a shot towards the end of the session on this. just sort of betting that the top is in and that you're going to give back a little bit of what we gained today. CPI was a big-time release. The news conferences out of Saudi Arabia were big-time releases. Really difficult to trade days like that. If in fact, look at the divergence we see right now. The US 30 is just a mess. The S&P 500 is up about 1%, and the Nasdaq's up about 1.75. So this would be a really tough one for me to trade, but you could definitely have taken it. Stop loss would be right there, somewhere right in there. That would have been your sell. Your sell would have been because why? Because you were in overbought territory right there, about 72. That could have been your short. So if you wanted to take the short, I mean, it's there. It's as simple as just going short, sell the market, see what happens. Is it in fact going to be a lucrative trade? It's going to be a really tight scalp, I could tell you that. You're probably going to want to base this decision on market structure. So if in fact you were looking to set a profit target, you're probably going to want to be down in there somewhere. And remember, you've got to do this at least at a 1-to-1 risk versus reward ratio. I do like that swing high as potentially being your out. However, if you wanted to play really tight, which can be very difficult, you probably could put your stop loss right above that swing high on a 5-minute. Just remember, that's really tough trading. That's very, very tight, very tight. And I think that could definitely be tough. We'll go ahead and let that one ride for a minute. Put our stop loss right up here where it's nice and safe, and see if we can get some follow through. Right now we're in the green a few bucks, but this is really tough. You're fighting a trend. Always remember, you can trade against trends. You can do it. You just got to keep your stop losses legitimately. You got to be aggressive with your risk management, and you have to be serious about your stop losses. The number one thing that you cannot do, you cannot get caught the wrong way on a trend day and just expect the market to spin in your favor just because you put a position down. Be very, very careful. Just remember, the number one way that people lose their money is they fight trends, and it's hard. It can be very hard on short time frames to recognize a trend and not end up going against it. This is a counter trend trade. You're fighting the daily uptrend. Right now, we're up about 1.69%. So if you take this short on the US 100, could it potentially be lucrative? If you catch the top of it, yeah, it could be. But is it high risk? 100%. It's very high risk. Fighting trends is tough, guys. If you're going to do it, you make sure that you have a stop loss location down and your leverage in check. You do not want to get overextended taking trades like these against the trend. We'll see how it pans out, though. The entry's there. You got all three parts of your trade. We just got to wait and see how it pans out. Okay, let's go ahead and take a look at a couple of these Forex pairs. Just using the Fibonacci sequence that I sort of fancy. So this is interesting. This is the EURUSD. We got a clean cut, just a clean cut 3-month uptrend, real tight on the monthly, real tight doji formation. And then you got an inside month on that doji, and then you get the big break. Now with the big break, the question is, okay, what do we want to do? I want to follow the trend. Is it a pretty good trend? It's not a bad trend. You got two great big candles there. You had nice compression right around 104. Then you got a break. Something like this could be fairly lucrative if you get the pullback right to your zone. Right there, 110.38, something like that. So maybe 110.50. That could be a pretty good entry point to the top side. We saw it sort of down at 110.65. This is a trade idea that I put out using a weekly chart, but you can use the monthly as well. Still fairly bullish here, but the US dollar is recovering a bit. So we just got to wait and see. I think that you could be just fine trading these levels. The first level right there would be 103.38-ish, something like that. And then 62%, 107.10, something like that. That's a pretty good zone, maybe even worth noting. You got converging indicators there, which is going to be your Bollinger midpoint and your EMA, and those are all right around 108.25 to 108. So that could be a nice support zone as well. A lot going on there, that's for sure. All right, let's look at one more market here, and we'll go ahead and call it a day. We'll be back on Thursday and do a little bit of live trading. Let's see here. Let's take a look at gold. Everybody loves gold. This has sort of been what I would say tough. The gold market has been dependent on the news cycle, more so than usual. The big trade deal from US China just sent things plummeting. Now, are we still bullish or bearish gold? And the question for me is relatively simple. I think that you're going to be bullish here, and the reason why is you've sort of got a chart pattern setting up. Now, I know all that looks hard. It really does. It looks difficult. So one of the things that I like to do is I like to keep things relatively easy. Now, I'm not a very good artist. I'm not an architect. I'm not a person that draws pictures, but we've got to at least get the basic idea down of what's happening price action wise on this gold daily. It's a cup with a handle. Now, is it a good one? No, that drawing's terrible, but it's a cup. There's sort of your first top right there. There's sort of your pullback. There's your cup. Now, there's sort of where that second lip was going to be. And then you sort of have this setting up as the handle. Now, would I say that this is a perfect cup with handle? No. But if you get a couple more days where you just sort of mill around out here, you definitely could extend that handle down and potentially have what could be a nice breakout. So the cup really is non-negotiable. You know where that is. So the question is the handle. Now, a lot of folks just like it to be real tight, compressed handle. Personally, I'm not above doing that, having that as a handle, because we're thinking of a bullish breakout. So if in fact that is the case and it does set up for us, you're going to have to get some pretty good bullish price action. Now, the key to the cup with the handles, always remember that neckline's important. So if in fact we do, and we haven't really seen it, but if we do get established beneath that with gold, then the cup with handles off, and you're going to be looking at probably a deeper reversal. So I think that you could probably buy somewhere if you do get maybe a tight day like you have today, maybe be able to send them long and try to get in on the rally. But things have definitely changed. The market angst is out of there. We showed you the VIX earlier. We showed you the trade deals. This gold market could, in fact, correct. And if that's the case, then I love leaning on my macro levels. I'm very confident in those. If, in fact, we do get the pullback that we probably will get at some point. I mean, 3,500 looks to me like it's setting up to be pretty much the top of this thing, at least for the immediate future. So do you want to be bullish or bearish? Still bullish. Right in there, though. That 38% is a pretty darn good level on the monthly. And remember, we always like to step back to our monthlies and our weeklies to give us a good idea of what the market is in fact doing. And if you can do that consistently, then you're going to have a chance to capitalize on those trends as opposed to getting caught up in the minutia of real short time frame charts. So I'm happy just sitting and waiting for my 38% level to come into play. But if you had to make a trade, or you said, Shane, I got to make a trade right now, I'd say, well, 4-hour chart. I like the 4-hour chart on the spot gold market for sure. You could probably do something like this and give yourself an opportunity maybe to sell. But once again, we've already missed it. I mean, you saw that one develop during the U.S. overnight. And that's just a beautiful, it really is. It's a nice pullback right to 38%, which is right around that 32.60. And then you got the big sell-off from there. So still a pretty darn good level up there. If you're interested in selling, you probably could do that. You've also got the 4-hour, that 13-period EMA on the 4-hour coming right down on top of the 38%. You might be in pretty good shape making that trade. It's not necessarily a bad short. The pressure's there. Personally, I want to see the deeper pullback before we commit to going long, because the game really has changed in the gold market, that's for sure. All right, Raphael, good to see you, Raphael Betancourt. T. Marina, where's the handle? Yeah, I mean, the handle, it's not the easiest thing in the world to see. But remember, chart patterns aren't necessarily perfect. Everybody, a lot of folks really, okay, it's got to be absolutely perfect, and they don't have to be perfect. But what you've got to have on that cup with the handles, you've just got to have a period of consolidation just a little bit beneath that second lip of your cup, and you should be good. But remember, if it does break beneath that neckline, then the market probably comes way off. So you want to be careful. It's not the prettiest cup with handle, but I think we're going to get a deeper retracement right down here to our money zone, and that's probably going to be a trade idea coming out tomorrow or the next day. All right, let's see how this 9 EMA fared. Pretty much what we expected, fighting an intraday trend. Very difficult to do. You just got to remember, when it blows up in your face, you just got to get out. And remember, these are demo dollars. These aren't real dollars. The idea to sit there and take a $1,300 loss on a 5-minute trade, probably not going to be doing that. But remember, you can trade against the trends, but you've got to make sure that you've got your good risk management down, stops down. You got to have a stop out point and a leverage in check. And right here, it looks like we took out that spike high, and we're probably going to drive much higher. So we'll just wait and see exactly how this develops. But that's the 9 EMA. We trade that one quite a bit, the 9 EMA with the RSI confirmation. Very popular strategy. Is it the best strategy? You gotta really know what you're doing with regards to market state. Taking a sell against that kind of upward pressure, really a difficult trade, but those are the mechanics of it. All right, everybody, I'm going to go ahead and sign off here for today. We're going to be back on Thursday. It's going to be a live trading workshop, 9 EMA with Fibonacci entries. We made a video a while back that shows you how to use the Fibonacci retracement tool with the 9 EMA, and you actually get to really skew some of the entries in your favor, and also flip the risk versus reward to your favor as well. So that's one of my favorites. I think we're going to be able to do all right with that one. It's just a great way to trade the 9 EMA and improve your entries. That's it. Okay, everybody. So happy CPI day. Big time day on the markets. We're going to see exactly what the close is. Right this minute, it looks like the US 30 is sort of making a run at it. We're only off about 97 points. It looks to me like these markets are definitely positioned to finish in the green and to close in the green. So been a little bit of a tricky week so far. Yesterday, there was no way for us to have any idea how far the markets were going to go after that surprise announcement. And then today you have another surprise announcement from Trump and CPI. It's been a tough week to trade. It really has been. So I'm looking for things to sort of heat up a little bit tomorrow. I think we're going to be in a position to make a few pretty good trades. But I'm watching WTI crude oil closely. Tomorrow we're going to get a good look. I mean, we're up 3% today. Tomorrow we're going to get a good look at those EIA figures and maybe see a pullback. So keep an eye on your analytics feed. That's probably where we'll put a trade idea out. Let me see. Isaac already has the stop on the US 100. Yeah, it wiped it right out. So when you're fighting trends, when you're fighting intraday trends, you got to be very, very careful and very selective. Like I said, these are demo dollars. Is that a real money trade worth taking? That's pretty shady. Pretty tough one. Okay, guys, I'm going to go ahead and sign off today. You have a fantastic rest of your day. If you need anything, swing by the How to Trade trading room and send me a private message, and I'll be sure to get back to you in short order. All right, thanks again to everybody in the room, everybody out there in YouTube land, everybody on X, and everybody on LinkedIn. Always a pleasure doing these live streams. And like I said, if you need anything at all, be sure to reach out. Okay, that's a wrap for now. Trade the action well, and we'll talk soon. See you.